Good evening, everyone, and welcome to this week's Tuesday Night Lives. And just waiting for everyone to hop online. Hopefully, you're all having a good week and kicking ass with your goals. So, cool things to talk about. Lots of things happening out there in the world. Lots of exciting things to talk about. Some ugly things to talk about, but that's what we do. We talk about the good, the bad, the ugly. Look at the opportunities and capitalize upon that. Because at the end of the day, we're capitalists, so we like taking advantage of opportunities out there, and we live in a world of abundance with lots of cool opportunities out there. So, moving straight ahead to our first article this week. My apologies if I sound like I'm sick or something like that. I'm not actually sick. I was just in a very disgusting property earlier that was full of rat feces, and for some reason I feel like I've got a lot of hay fever. So yeah, I was doing all right until that occurred. That was actually late yesterday. But anyway, uh, got a few articles that we're going to run through today, and then we'll get into today's topic. So today's topic is how to build. I think, what did I put the topic of the caption as? It's about how to build a profitable portfolio and to create success with your journey. So before we get into that, got our trustworthy news articles. This one here is Turkey's inflation hits a new 24-year high of 83% after rate cuts. So I thought this week I'll explain a little bit about why I share these exciting news articles with everyone. Some people take what I say as fear, right? And I just want to be very clear that I'm not a doomsayer. I'm not out here to spread fear and all that. I'm very excited via looking at this information. I like looking through the facts and the figures and looking for the opportunity. And the opportunity that I've seen from day one has been very, very clear for me. It's that we've got a currency that is dying. We've got opportunity as inflation hits. You want to be taking any asset. Doesn't matter whether it's this pen. Doesn't matter whether it's this screwdriver. Doesn't matter if it is whatever it is that you can take through. It's all going to be worth a lot more when the currency falls apart. What's better is having something that's larger in scale that you can take through, i.e. a property. The property will go up in value, but you've also got the cash flow that goes up in value. So that's why I look at these exciting things. So the importance of this article, this is the first one today. This is off Reuters. Turkey inflation hits a new 24-year high after 83% after rate cuts. That in itself is funny as a headline. Goes on to say Turkish annual inflation climbed to a new 24-year high of 83.45 in September. Data showed on Monday, still lower than forecast after the central bank surprised markets by cutting rates twice in the last 2 months. So we know that we live in a global economy, right? We know that all the markets are tied together. We have got every country's interest rates going up. And I said that this cycle will only go on for 6 months. It can't go on any longer than that. It might go on for a couple of extra months, so be it, right? A lot of people are fearful, it's going to go up to 10%, it's going to go up to 5% at the RBA. This thing could go on for 10 years. These are interest rates that are normalizing. There ain't no normalizing. And if someone says to you it is the new normal, right, stop watching TV, because that's where that brainwashing is coming from, right? It is physically, mathematically impossible for the rates of monetary policy to go to where it is at the moment and for it to stay there for a long period of time without the whole system imploding upon itself. So that's why I expect to see this. So we've now got China dropping their rates. We've got Turkey dropping the interest rates. 2 consecutive months of rate cut policy. Despite the soaring prices, the central bank was expected to cut its policy rate again this month after President Tayyip Erdogan called for a single-digit interest rates by the end of the year. So Turkish interest rates are very high, but as is their inflation rate at 83%. So what we have here is a position. This is very, very crucial for us to understand what is to come to us, whether this is today, whether this is in 2 years' time, 5 years' time, or 10 years' time. But if everything doubled today, if you had a 200 grand property and doubled to 400 grand, yes, everything else would go up. But your 150,000 mortgage is still 150,000. the only reason why your assets go up in value is due to inflation, and that is control of our currency, and it's the demise of our currency. So when I see inflation going up like this, it's amazing. But Turkey has now come out and they're saying we can't control inflation. We have to fix our interest rate, so we're going to cut our rates. So we are now seeing rate cuts, even though they've got 83% inflation. You never saw inflation like this beforehand. You're seeing it now. I talked about high levels of inflation and even hyperinflation going back 5 years ago. We are now entering that phase. So let's read the rest of this. Month on month, consumer price rose 3.08. The Turkish Statistical Institute said, less than Reuters poll forecast of 3.8. Annually, the consumer price inflation was forecast to be 84.63. It was the highest annual figure since 1998, when it stood at 85.3, and Turkey was battling to end a decade of chronically high inflation. A decade. Imagine having 100% inflation per year, times it by 10 years, right? So the property doubles this year from 200 to 400. Then next year it doubles from 400 to 800. Then the year after it doubles from 800 to 1.6, doubles from 1.6 to 3.2, 3.2 to 6.4, 6.4 to 12.8, right? Million. Imagine that level of inflation. Imagine having a debt. People go, oh, I'm scared. What about being scared when you've got an interest rate or whatever it is, your property's worth 12.8 million, but your loan is still 150,000, which is where it started. So that's where inflation comes in. This is the bigger picture, guys. You need to look at the bigger picture here. September inflation was driven by transport prices, which surged nearly 118% year on year. So transport prices surged 118%, while food and non-alcoholic drinks prices jumped by 93.05%. Despite the relentless rise in inflation, Erdogan said last week that he advised the central bank to lower its policy rate. Like this guy has any say over the central bank. The central bank sits above the government, right? But apparently he said that anyway. At its upcoming meetings, a day after saying he expects interest rates to come down to single digits by year end, JP Morgan said inflation was likely to remain in the abnormally high range until policies get orthodox, adding that it expects the easing cycle to continue until it cannot, i.e. they get to zero or negative, right? Monetary policy decisions have become disconnected from macro fundamentals and have become almost irrelevant in short-term inflation dynamics, it said in a note. That is very crucial to understand, that statement in itself, because this is a big country, Turkey, that is coming out saying monetary policy decisions have become disconnected from macro fundamentals, so the fundamentals are completely off the table and have become almost irrelevant for short-term inflation dynamics. They have thrown it out. Inflation sits at 90%. Who cares? We need to drop the interest rates, right? That is what's happening to a country near you. Recessionary forces. Global recessionary forces, their impact on commodity prices and the pace that the lira's depreciation will be the main determinants of inflation, JP Morgan added. After the data, the lira traded 18.56 against the dollar, weakening from a close of 18.5 on Friday. It stood blah, blah. The currency has been less reactive to economic data and Erdogan's comments in the past, largely due to the central bank adopting a more dominant role in the forex market since December. Goldman Sachs says now it expects the central bank to cut its policy rate by 100 basis points every month until the end of the year. So in Turkey, the interest rate is falling at a rate of 1% per month. They have failed to control inflation. Inflation is through the roof. If you want to worry about something, don't worry about your interest rates. What you should be worried about is the level of inflation that's going to be coming to you. And I will back that up very shortly. The bank cut its policy rate by 200 basis points to 12% in the last 2 months, going against global tightening cycle despite the sustained rise in inflation. So they are dropping interest rates no matter what. Last year's rate cuts has triggered this currency crisis that wiped 44% off the lira's value against the dollar in 2021. It has weakened some 29% this year to fresh all-time lows. Last week's Reuters poll showed that annual inflation was expected to decline by 72% by the end of 2022. The government said its inflation will fall in its economic program. So they're saying that inflation is going to fall, but it's still 83% or 85%, whatever it was, and they've dropped interest rates at 1% per month. Anyway, here's the next article, which is once again based on Turkey. This one here is from, I don't know which publication it's from. Turkey's inflation exceeds 80%, worst price blowout since 1998. Turkish inflation, we all read through this just then. Annual inflation quickened for the 15 consecutive months to 80.2% in August, up from 79% in July, according to data released on Monday's Turkey Statistics Agency. The median forecast of economists surveyed by Bloomberg was 81.2. So anyway, there's my second article. Same thing. Turkey has 80% inflation. They are dropping interest rates because they cannot control the level of inflation. Everyone's scared about how bad it's going to get here. Exciting time to be alive. This one here is very important, right? I'm going to move this one to this one here. There's two very ugly articles. I'm going to slide them in here. They're not really relevant to property investing. Sometimes people say, Nathan, stick to the topic of property investing, but I think it's very, very important to know how it all ties in. So this one here is just very sus, right? It's like, do not trust your government. Do not trust your media. This one here says the government pushes for digital identity system after the Optus hack. Who remembers Gladys, right? Gladys from New South Wales, right? The what do you call it? The Premier of New South Wales. Gladys was the Premier of New South Wales that locked everyone down in their properties, that did all the forced sort of things that had gone on. And suddenly she went to Optus in a senior management role, and suddenly Optus got hacked. And now her friends at the New South government are now pushing for a digital identity. So just look at all the different things that are coming in, right? So it goes on to say, Finance Minister Katie Gallagher, together all the digital ministers, kickstart a rollout of a national identity system amid calls for the government to build a new technology infrastructure that would reduce the risk of identity theft following the Optus data breach. It comes as New South Wales Customer Service Minister Victor Dominella called a decentralised identity system and the end of paper-based identity. So digital identity with a digital currency from the same people who locked you down, forced you to do certain things, treat yourself badly, really, really questionable world we live in, questionable people we should be taking advice from. After drifting for years, the Optus breach has highlighted the need for a digital national identity system, but legislation that was drafted by the Morrison government still needs to be passed to allow the digital ID to be used more broadly by the private sector. Ms. Gallagher said the digital identity legislation and related issues will be discussed by relevant Commonwealth, State and Territory Minister in the upcoming Data and Digital Ministries meeting in early November. Timing for passage of these laws will be informed in those important ministerial discussions. If this Optus saga was not a burning platform for change, then I don't know what is. So just the same as they rolled out for certain things to happen, now they're opting out and doing the same sort of campaign over your identity. And they're doing it over climate. Interesting, hey? As I said, I have got a bit of hay fever, something like that. I was in a very disgusting property about 24 hours ago. The end of 100-point ID check. Mr. Dominello said federal, state and territory governments need to work together to establish a national legislation for a trusted digital identity framework to be used more broadly. If this Optus saga is not a burning platform for change, blah, blah, blah. All the downside with no upside. Researcher at the ANU specialised in cryptographic identity systems. Anyway, I think the first line says it all, right? We are heading, as predicted over the last couple of years, and as mentioned at the start, a social credit system, digital currency, economic social governance, ESG, our environmental social governance system, ESG, which will be passed as a new currency when our currency completely fails. We're not there yet, but we've got to have a hyperinflation to rip through it and let us know that we're at the end of days for that. So very exciting times to be ahead. This one here is probably the scariest bit of news that I have seen ever, right? Scariest thing. You can see here there is a logo for New South Wales Health, right? This article was from the New South Wales page, government website. New South Wales fast tracks mRNA, FMD, and lumpy skin disease, right? Foot and mouth disease. This was published on the 28th of September from the Deputy Premier Minister for Agriculture. The New South Wales government has taken another step towards fast-tracking the world first mRNA thing for foot and mouth disease and lumpy skin disease, inking a deal with US biotechnology company Teva Biotech. Deputy Premier and Minister for Regional New South Wales Paul Toole said today marks an important milestone towards securing the technology that will assist to protect Australia's $28 billion livestock industry. The New South Wales Nationals in government are taking the threat to foot and mouth and lumpy skin extremely seriously, and this milestone is another step forward for preparing for a potential outbreak of lumpy skin, whatever that is. I've now written to the manufacturers of the so-called looking things, right, to take up my challenge to develop both of these for use and manufacture in New South Wales by the 1st of August next year. The situation for the last 2 years has demonstrated to us that all possible avenues in developing these sort of things must be explored, and we will leave no stone unturned. Minister for Agriculture Dougal Sanders said the agreement with Teva Biotech gives New South Wales another path towards developing these things with the technology in them for these different things for the animals. It is critical that we develop a special type that's not like your normal ones, which is like everyone was forced to have, to protect the state's livestock. The threat of the FMD is ongoing, and there is concerns lumpy skin disease could enter northern Australia this coming wet season. So it's critical, due to climate change, of course. So it is critical we continue to do that so we can, as quickly as possible, these ones use the virus itself. And there is yet to be an approved one of these for the use of these other things. So creating the mRNA version of this would help combat the illness. It will be a game changer. The special mRNA version of this are cheaper and quicker to produce, highly effective and very safe. Well, if they're very effective and safe, why have we got higher levels of the illness at the moment going around when everyone's been so many times? This here, as I said, is the scariest thing I've ever seen. This means that all meat and all food that you'll be consuming will be modified using special technology, meaning that any bit of meat or food that you get will be DNA altered using a particle sort of whatever they do, right? How does that relate to everything that we do here, right? I know that you might be here watching for finance. A lot of people might be sitting here thinking, Nathan, I remember when you used to do renovations. That's what made me follow you. People might be sitting here going, Nathan, you used to be cool when you were on TV and all those sorts of things that I used to do. I'm just calling out bullshit when I see it. I'm calling out very bad things that are happening from your government, from your media, from your corporations. We're being brainwashed and lied to. The ability when I first started this business at B.Invested was for me to help other people live life on their terms. In the last 2 years, we've been busier than ever helping people with their journeys, right? And I remember when I first started, I was like, just retire and, have some properties and have some cash flow and have some wealth and all that. I feel like this has become more of a war, right? A war of people's freedoms. I'm all about freedom. I'm all about liberty. I'm all about people being able to be good human beings to other people, for people to be able to live life on their terms. You don't need to be a bad person, right? I've been to funerals lately of people, right? I'm not trying to be all morbid, but and you see people, and it's like, it doesn't matter what walk of life people come from. It's like people come together because they're good people, right? There's things that are going on that are bigger than all of us here, right? This is our government saying that they are forcing your choice by what you're eating now, right? Freedom means that you can have your own farm, that you can have your own cattle, that you don't have to be forced to go to a job. Freedom comes in all different matters, right? I never thought about this stuff when I first started investing. I didn't think of this stuff when I first started my property portfolio. I just didn't want to have to be trapped in a job. Most importantly, I don't want to be trapped in the matrix. And I think there's so much opportunity. I think there's so much cool stuff out there, but I think it's important to take control of your life. The investing is one part of it. Having the ability of choices and freedoms and the ability to do what you want, when you want, how you want, is very, very crucial. They say this is going to be installed by the 1st of August next year. This is your government saying what they are doing and altering the food you eat, right? If you didn't want to have a choice of certain things happening to your body last year, then next year you're going to be forced to have that via your food. Grow your own food, have your own animals, have your own water supplies, have stuff that they can't control. They don't want people with power. They want people to be submissive. If you control and you're in need, you don't want to be borrowing from the toughest guy on the block. The toughest guy on the block is the Gestapo. It is the controlling part of the matrix. You don't want to be the bitch of that. So the importance of having options and freedoms to do what you want, when you want, how you want, has never been more important. So, as I said, I shared that article. It is the most scariest article I have ever read. It's not even an article. It is a statement, press release from the New South Wales government. You are being forced to take if you have chosen not to have this from your right as a human, you will be eating food that will be forced with that, right? That's from the New South Wales government. Get your farms, get your food, get your pals, get whatever you need to be organised so you can control your life, you can protect your family. Not trying to be negative, guys, not trying to be fearful. I'm excited by it, right? I've designed my life to be able to do that. I think that's important for planning your life and having your goals to do that. Anyway, moving along to some other fun articles. I've got some really cool ones here. This one here is from Sky Business News. It says, do not raise interest rates. UN, United Nations, warns Federal Reserve and other central banks. This is very fun, right? Because everybody wants to talk about interest rates and go, oh, they might be going up. Better not invest at the moment. Better not buy shit. Well, let's go and have a look at this. The UK's... This sounds like something Birchie would have said, right? It's like I'm talking stuff before it happens. And they start writing articles about it after I say it, right? It's not manifesting it. It's just... You can see the writing on the wall. The UK economy is forecast to contract by 0.9% in 2023. The UN agency said amid a series of headwinds resulting from Brexit and international conditions. Guys, the UK doesn't have any issues anymore. It's because of Brexit. It was because of the illness before. It was because of China. It's because of Russia. It's because of climate change. It's because of pink hair, blue hair, green hair. Now it's because of Brexit. Right? But the UN has warned, most importantly, do not raise interest rates. Right? Why? Let's go read through it. A recession worse than experienced after the global financial crisis, so the GFC, could result from monetary regulators tightening policy and hiking interest rate. The United Nations Conference Trade and Development has warned. Oh, well, bloody Birchie from Western Sydney warned that himself going back for the last 6 months, right? If they increase the interest rates, they will cause the biggest depression ever. I actually warned about it back in 2017, 2018, when I came out, if you Google what is the GFD or GFD financial, no one's talked about it. I made articles out there back in 2017 talking about a depression of biblical proportion, right? And the opportunities. The only way that you can stay away from that is by printing ourselves to the oblivion, printing so much currency, we end up with a hyperinflation, which means every asset goes up. Doesn't matter if it's your chicken, doesn't matter if it's your Macca's, doesn't matter if it's your DNA altered food that you're getting, doesn't matter if it's your house, doesn't matter if it's your car, doesn't matter if it's your power, no matter what it is, it'll all be all be impacted. You want to hold on to as much shit as you can and see that get inflated away. The Trade and Development Report of 2022, published by that UN department, Monday, expressed worries for an unduly rapid tightening of monetary policy in advanced economies in combination with inadequate multilateral support could turn a slowdown into a recession. Well, we know that it's not a slowdown. We know it's not a recession. It is a recession today, but it could very easily become a depression. That is a fun fact on itself, right? The only thing they have to do, the only thing that they have left in their gun to shoot at is a bullet, which is hyperinflation. They have to print currency. It's the only way through this. It's the only way through this. This would trigger a vicious economic circles with developing world, with the damage more lasting than after the global financial crisis or the illness, right? I won't say the word because I've never ever once said it, but you can see the word here. It's saying that it will make, if they increase interest rates any further and don't unwind them, that it will be worse than the GFC or the thing that's happened in the last 2 years. So that is what gives me so much confidence to go, I'm going to pick up shit. People are scared. There's people out there, there's anyone that's selling a property right now, if you are really stretched and in a dire position, work out what are the options that you've got. If you don't need to sell a property and you're selling a property, you are doing it based out of your lack of knowledge, right? Because it would be stupid. You're giving away an asset which you won't be able to buy back in the future because you're taking worthless currency for it as a payment. The actions of the central bank, the Federal Reserve, known as the Fed, were specifically addressed by the report for hurting growth. This year's interest rate hikes in the US are set to cut an estimated $360 billion of future income for developing countries, excluding China, and signal even more trouble ahead. Instead of increasing interest rates to fight inflation, policymakers should put in place price caps funded by one-off taxes, unusually large profits being made by energy companies, led author Richard Kuzel-Wright told the Wall Street Journal. Late last month, the Fed, similar to the Bank of England, said it was committed to reducing inflation to 2% by increasing interest rates to 4.4% by the end of 2022 and 4.6% in 2023. Higher interest rates mean paying back debt such as mortgages and credit card repayments becomes more expensive. The Bank of England also raised interest rates in the UK to 2.25%, the highest level since 2008. It's expected this rate to rise to 6%, even higher than has been announced. Overall, the world economy expects to grow 2.5% this year. Just think about it this way. Do you know where money is created from? Where does money come from? Everyone goes, the government makes it, right? It's created from your central banks. So in short, let's just find a little piece of paper, right? Let's just assume that we can all agree upon this, right? Let's say that the first dollar was created into existence, right? Let's just call it $100, right? The first $100 was ever created into existence, right? Then that was created by the central bank. Let's call it the RBA, right? The RBA printed $100 and then they loaned it out to the people, right? And they attached an interest rate of, say, 5%. Let's just be really conservative here, right? So the RBA creates its first $100 ever to be created in existence. They give it out to the people and they charge 5% on it, which is what the RBA charges, right? So they create this money, 5%, that's what we have to pay. So let's say the first year goes by, right? They need to pay the 5%. 5% of $100 is $5, and that leaves $95 in circulation. Right? Hope you're following with it, right? So if the people wanted to pay back the money to the central bank, the $100, well, they could, but then they'd have to pay back the 5%. So what happens is the people would have to then go back to the RBA, get a loan for $5 and pay it back to the RBA. You'd lose everything that was ever created, plus you'd now be in debt for $5. So the year comes past and you have to pay 5% of that, so you need to pay 25 cents of interest. Where's that come from? You've got to go borrow it from the RBA, so on and so forth. So the more currency that they're printing, right, it's this endless cycle. But we're now at a point, which is Judgment Day, which it can't be paid back. The whole world is based on this big debt Ponzi scheme, and they're trying to get it under control just like that by recalling all the money and getting it back in the box. But the problem is that there's still a massive debt, even if they took all the money off the playing field. That lays the problem itself. Let's read this article here. This one here is a woozy, right? I had this one sent to me today. I had two actual leads here from 2 pages here of articles that were sent to me from one of my investors, which said, Nathan, they're literally saying everything that you said beforehand. So this article is from the Sydney Morning Herald, and it's not from anything else. It goes on to say, money drain fears are rising that the global financial system will seize up. When the Bank of England was forced to intervene in the UK bond market last month to avert a foreign exchange and bond market crisis, it could have been seen as an event unique to the UK. Could it have been, however, a symptom of wider problem and foretaste of future crises to come? A unique feature of the BOE's decision to perform a policy about turn and announce that instead of selling the hoard of bonds it had acquired during the pandemic to keep UK interest rates so low and bond market liquidity high, it would start buying them. Was in response to the UK government announcement of a massive tax cuts and spending program. So now they're wiping the floor, saying that it wasn't because of what they did, they're causing it on something else. That announcement caused long-term bond rates to soar and the pound to plummet. There was immediate solvency crisis in the UK pension fund sector, where the use of leveraged derivative strategies to cover long-term liabilities in defined benefit funds saw the funds dumping their bonds to meet collateral requirements. It was like a massive margin call. So just think about it. You've got a super fund. How much money do you have in it? What's it invested into? Who is control of that money? Who's making the decisions for you? They're all questions to be making. If you don't know any of those answers straight off the top of your head, you need to have more clarity and more view over your money, right? A lot of people I know that will be watching this will have 200 grand, 300 grand, 500 grand, 100 grand in their super fund. That's money that's yours, but you have got someone controlling it for you, someone being an overlord, pushing buttons like it's a poker machine. So do take control of your own personal position. The action taken by the Bank of England and some backtracking by the Truss government on the proposed tax cuts has settled the market, although the UK bond yields remain high. The market's convulsions, however, highlighted their frugality and vulnerability. That is not an issue confined to the UK. Participants in the bond markets from the US to Australia are complaining about the volatility and dearth of liquidity in their markets that has developed as developed economy countries. Central banks have begun raising interest rates and backing out of the quantitative easing programs they implemented in response to the pandemic. No shit, right? This is why I was so confident, so cocky about interest rates never going up, because they can't. If they do, the whole system implodes, right? And they're going to have to change the course of this monetary policy, which will mean the next boom, and this isn't a boom on property or anything like that, it's a boom on everything. It's the collapse of our currency and everything will be inflated away. So you want to be holding as much asset as you can to take through that cycle. Fears that this could lead to a financial crisis like the near meltdown in an obscure corner of the US financial system at the onset of the pandemic have been dismissed by policymakers. Last week, a Federal Reserve Board Governor, Chris Waller, used a clumsy analogy to respond to lots of comments about Treasury market strains on liquidity. I've always joked that on October the 31st, the liquidity for pumpkins is very high, but on November the 1st, market liquidity for pumpkins goes to zero. But I'm not going to step in and try and fix the pumpkin market. So this is the kind of weird thing that with liquidity is really talking about no one's out there willing to pay the price you're asking. Okay, that's fine, just lower the price. We're now at a point where the financial markets cannot sustain current levels. It has been said that the financial markets are somewhat more complicated than the market for pumpkins on Halloween. They are impacted by regulation, by sentiment, by risk of appetite, by participants' capacity, and highly complex and opaque relationships between markets and different securities, along with other influences. There is a demand issue developing in the global bond markets, and particularly in the US, where the Fed is pursuing the most aggressive monetary policies. It has raised interest rates by 3 percentage points since March, with at least another 1.5 percentage points coming, and has been allowing its near 9 trillion holdings of US bonds and mortgages to shrink as the securities mature. That quantitative tightening, QT, started by allowing 47 billion of bonds and mortgages to mature without reinvestment on the proceeds in March, but it was increased last month to a rate of 95 billion per month. So what was printed out of thin air has now turned into taking out of the market $100 billion a month is being taken to the market in the US via their bond buying program. They are ceasing the bond market. They are taking liquidity out of that system. Crazy, crazy times. That's why we're starting to see inversions of yield curves. Shorter term funds are paying a greater return than the longer term treasuries are. Sorry for my sniffles. I always say, I'll always be here, guys. I'm always here, no matter what. The Fed has been, and for the most of the period since 2008 financial crisis, the largest buyer of US government bonds and mortgages, and ending its QE programs, owning about a third of each market. It is now buying about 60 billion a month less treasury securities than it was before the pandemic-related QE program ended in March. So they're taking more liquidity out of the system today than what they were prior to Corona, and the situation has got a lot worse since that pandemic started. It is not, however, for the only former buyer to have reduced its appetite for treasury securities. China, Japan, and other governments have stopped buying or begun selling off their holdings in response to the rapid rises in yields and consequent losses on the market value of these bonds. Bond prices fall when yields rise. So that means that with them pushing up the interest rates, it has imploded the bond market. The bond market is connected to everybody's super fund. Go to your financial advisor and hear him talk about, oh, the bonds and this and that, the bonds and that, the bonds and this. Where do you think your super fund is invested into? Let's go and read through a few more parts of this. The Fed has taken about $180 billion of demand out of the market already and is targeting a $2 trillion reduction in its balance sheet over the next 2.5 years. So the money that has been printed, they're trying to take out of the system, but they can't because the system is imploding on itself. Crazy, crazy times. What is my thoughts on that? It just goes back to everything I've been saying. Interest rates will have to come down. Everyone's worried about interest rates going up. I was the first one to call it. You can take it as, tell me who else is out there talking about it. Interest rates, I believe, will start falling between March and July of 2023 globally. We're starting to see it in some countries. Electricity bills jumped 35%. Power company boss warns. The energy prices went up by 20% in July, right? And I said that they'll double by the end of this year. So now we're seeing here articles coming out. This is out today from, I think, Reuters or somewhere. Cost of living pressures are set to worsen for households, with power bill prices forecast to soar by 35% next year. Energy company bosses have warned. Next year, using the current market prices, tariffs are going up a minimum of 35%. Jeff Dimery told the Australian Financial Review at Energy and Climate Summit. Interesting that the Australian Financial Review has an energy and climate summit. How come they are pushing the climate summit agenda? Interesting. Tight supply issues and Russia's invasion of Ukraine have put pressure on wholesale prices and international commodity markets, the summit was told. Well, if that's the case, and Australia is rich of all these commodities, that means that we should be sitting very pretty. It means that we should have lots of profits coming through. Right? Just go think about that. That's if that's what it is to do with. The early closure of coal-fired power stations also creating a rocky transition to renewable energy. Under the predicted 35% rise next year, the average quarterly power bill in South Australia would be $514, New South Wales $480, and Victoria customers $430. The forecast increase from Atlanta Energy was not shared by the bosses of Origin Energy and Energy Australia, but households have already been hit hard by rising power costs in winter due to the Ukraine's war impact on global energy market. There was an increase of up to 18% in household tariffs on July 1, exactly. In the forecast jump in power price happens, it would follow soaring costs in the UK, which prompted protests and calls for government intervention earlier this month. Climate change and energy minister boss Chris Bowen told the conference that transitioning to renewable remains the best way of bringing down power costs and household bills. Labor pledged its policy would result in power prices falling by 2025 during this year's federal election campaign. So let's just go back and think about that, right? We've now got power prices going up. We've got inflation. We've got the cost of everything going up. Do you think Woolworths is going to accept that their cost of electricity, which might be 10% of their costs of their business operations, so let's call it 5%, let's call it 2%, let's call it 3%, goes up by 35%? Absolutely crazy, absolutely crazy. They're going to add that cost on, which will cause even greater levels of inflation, and that creates and spurs off, it's the like spark to the petrol tank to start the fire up of hyperinflation. On this note, guys, I feel like I'm getting very congested and I can't stay on for too much longer tonight. I'm going to get to the main part of this evening's Facebook Live, and I actually just realised I've got a webinar tomorrow night as well. So make sure that you tune into that webinar tomorrow. But getting into today's episode, talking about how to plan to build a successful property portfolio. Can you do it still in 2022? I believe that the fundamentals in 2022 are probably even better than what they were back in 2015, 2010, and so on and so forth. So can you build a portfolio still? I've got numerous amounts of people that are just everyday Aussies that have built 10 plus property portfolios over the course of 2021 and 2022. It all starts with planning. I always say the importance is having a good relationship with debt. I think it's important to have a good relationship, and that's sort of why I talk so much about this news and what's happening globally, is to understand how money's working, understand how macroeconomics works, understand what's the foundation of our markets of what we've got, understand how debt works, have a good relationship with debt, and then work out where it is that you're going and what it is that you need to do in order to get there. So mapping out a plan is crucial. Once you've got the plan, then you can work through to work out what else you need to do along the way. So how does your finance fit in? How does your tax returns fit in? How does your income fit into the situation? How does, someone messaged me yesterday and said, hey Nathan, I'm going to become self-employed next month. And I'm like, you become self-employed, yes, you've been, PAYG, but now you're going to a self-employed perspective, you will probably be locked out of the market for a period of 2 years. So there goes your property portfolio. They didn't realize that. So you need to work out your overall strategy. You can't work out a strategy without working out what is the end goal and where it is that you're at today, and then fill in the pieces. Then you need to work out what sort of strategies you need. You need a finance strategy. You need an acquisition strategy. You need a strategy around risk minimization. You need a strategy around your cash flow management. There's different strategies that you need along your journey. So plan for that. Very, very crucial. A lot of people don't do that. A lot of people will focus on just buying a property because they want to buy the asset, but it's not just about the property. The property is just a part of the chessboard. It's like having a queen or a pawn or whatever it is on a chessboard, right? You have the piece on the chessboard, but you don't have the board, you don't have the foundations right. That piece is absolutely useless. You can't play a game against yourself without having, the rest of the picture. So, to push past from one property to two to three to four, I've seen it so much over the last 13, 14 years of business where people say, Nathan, I want to get to 20 properties, but I don't want to do this, I don't want to do that, I don't want to do this. They want to just do this, right? So their mindset is telling them to go and take this action because that's what they've been led to believe. That's what everyone has told them to do, whether it be they must buy a house. They must have it in the area they come from. They must, do whatever. Reality is it all comes down to numbers, and the property is a second product to what their goal is. But a lot of people get stuck at one or two properties because they're looking at their emotional aspect of the reason of what they've told to do, but without thinking, okay, I'm making this decision because of Y. I'm making this decision to get me close to X, Y, Z. I reckon that 95% of people out there, which we go to look at the stats, 0.1% of Australians have 6 or plus properties in their portfolio. How do they have only 6 or plus properties in their portfolio? Is because they have a different mindset. What makes those like 18,000 Australians that have 6 or more properties in their portfolio so different to the other 25 million Aussies that don't have 6 or more properties in their portfolio? It all comes down to a strategy, all comes down to having a logic-based investment approach, not just a property and emotional-based approach. I see so many people with their thoughts of, people buying properties out there, 99% of the market are not asking this one simple, very important question, is what am I buying this property for and how is it going to help me get to the next level of my journey? And you want to know very clearly, not only how is it going to get me to the next level of the journey, but what is the opportunity cost? If I take this property, it's going to take capital, being deposit or equity, cash savings, whatever the deposit is taking that money out of your access and you don't have that anymore. So could you get a better return on it? What is it doing to your cash flow? Is it helping improve your servicing? Is it helping improve your net worth position? I'm constantly working at how can I keep improving my net worth position? How can I increase my asset holding? How can I increase my cash flow at every point along the way? A lot of people will focus, when I look at that, they'll focus more about the location of where the property is or the attributes of the property. Oh, it's a subdividable block. It's a property that is in a street which I know. It's on the high side of the street. It is in that growing suburb. It is in the corridor of potential growth. I heard they're putting a new railway through. Whatever the case may be, that's what people are making. Most people are making the decisions of property investing based on that. Most people aren't looking at, okay, if I buy this property, it's going to increase my asset base by this. It's going to increase my cash flow by that. It's going to increase my lending capacity by this. It's going to increase my net worth by that. They're not looking at those questions. When I'm buying a deal, I want to know what is that property doing. I'm not sitting here, you've never heard me say, hey guys, I've just bought a property today. I've been in the market looking for a property I can build a granny flat on. I've been looking for a property that I can develop one day, right? If it's a bonus, if it happens, great. I'm looking at what is that property going to deliver for me to help improve my position, to get me on the next level of my journey. And that's what I think everybody should be looking at, because there's so many people that are going to be forced. Like, I'll go back to the articles beforehand of the foods being filled up with, things that they don't want in their food, but without, the number one goal should be getting to a position of being able to control your life. The cash flow is important, the equity is important, the net worth position is important. They're the important things. Putting a garden, adding a second dwelling, they're all for punters out there. What was the next one? The deposit. A lot of people will just think, okay, I can't buy a property. I don't have a deposit yet. I haven't got a deposit. I can't save up a deposit, etc. I'll never be able to afford a property in Sydney. So I'm trying my best to do these Facebook lives and, being a bit crook. So, but a lot of people think, okay, I can't afford a 200 grand deposit. That's it, I can't buy a property. You might have 20 grand, you might have 30 grand. I did a house today, $130,000. Previous sales on the street, $250,000. It was a house on land, rent for $275 to $300 per week. Those deals are absolutely out there in 2022. These properties were selling for double the price going back 10 years ago. 10 years ago, interest rates were 8%, 9%. Today, they're 4%. So you can sit there and say, oh, interest rates are so bad, or whatever the case may be. There's always something you could be doing. So if you're sitting there thinking, I can't afford a property because I've only got 20 grand or 30 grand, you can still buy a property today with $20,000 or $30,000. You could be sitting there saying, okay, I don't have any money. I can't save 20 grand. I can't save 10 grand. I can't, buy 10 properties, whatever it may be. Well, have you explored all the options, all the potential? When I say have you explored all the options, have you looked at what your servicing is like? Have you seen what equity you've got in an existing property? Have you seen, what other options that you've got with other instruments around you, could I call it, or other sort of options? There's also many different things. Like, people call my office every day of the week. They're like, hey, I don't think I can buy anything, 1, 2, 3. Next minute, they go, okay, my super fund has 250K worth of Ponzi scheme money, which is invested in derivatives, all this stuff. People might be able to buy property in a super fund. People may be able to team up with their sibling. People might be able to team up with their spouse. People may be able to get the deposit from somewhere else. People may be able to get the equity from their property. People may have a car that they might be able to sell. People may not even know that they can get into a property for 100 grand a day with a 20 grand deposit. So you need to overcome that. You need to look at, okay, what things do I have at my disposal? I've done all different crazy things to be able to get into deals with no money down. Still to this day, I do so many no money down deals. The less money I put in the deal, the happier I am. A lot of people get stuck on finance when building a portfolio. And I think, I'm trying to get it all out, guys. I'm trying to get it all out. A lot of people come to me and they're like, Nathan, I'm stuck, right? And they don't look at why they are stuck. They don't look at the fundamentals. I always want to go, okay, well, why are we stuck? The first thing I ask everyone that says they can't get finance, I go, okay, how much do you fail servicing by? They go, what do you mean, how much do I fail servicing by? I'm like, have you spoken to your broker? Your broker said, no, you can't get a loan. That's correct. With which bank did they try? Oh, with CBA, right? It's okay, well, you could get a loan with a second tier lender, with a third tier lender, right? Have you tried that? No. We're going to ask, right? Question is that I always leave people with is, how much do you actually fail servicing by? No one can ever answer that question. Like, they can't sit here and say, oh, well, my broker told me I need to get an extra $200 per week. I need to get an extra $100 a week. I need to get an extra $1,000 a month. Whatever it is, that is the important part, because that is your starting position. You need to then go, okay, well, I'm behind the 8 ball by $1,000 a week. What do I need to do? Well, that's $250 a week. How can you get another $250 a week? Can you go get a job that's going to pay you $250 a week? Right? That's one step. But it's not about then going, okay, I'm going to get a new job. You might be able to get your job to give you an increase. That could be, $50 a week. Then you go, okay, I'm short $200 a week. What can you do to get $200 a week? Could you increase your rents? Could you go and buy something? Could you go and invest in something? What is it that you can do? I've had so many people come to my office over the years that can't do anything, and they walk out and they're able to get, they might be at 5 properties and stuck, and then they just tweak something and they go, okay, I can go buy another 5 properties, another 10 properties, another 15 properties in their portfolio. So don't just think that is the end of the road. It's like, okay, well, what do you need to change in order for you to get to the next level of your journey? And I don't think most investors are looking, the ones that are in that 18,000 people out of 25 million people, the 0.001 of Australians that have 6 or more properties, they're constantly looking, how can I improve this? What can I do with my servicing? What is my equity at? What is my net worth position at? Constantly looking every 3 months, how can I push up my cash flow? How can I push up my rent? Etc., etc. So it's my second last thing. Last thing I want to talk about is the obvious, which is on my screen, which is about interest rates. So I've covered off interest rates dramatically over the course of today and over the course of previous episodes of Facebook Live and all the podcasts and that. So I won't be going into that today. I guess I've got some questions here from you guys. I'll answer them before I hop offline. Um, I guess the main thing is if you guys are in a position where you're stuck or you're at a crossroads, you're like, okay, I've got one property, two properties, three properties. How can I get to 5 properties, 10 properties? How many properties do I need to get financially free? How many properties do I need to get myself a farm? How many properties do I need to be able to go, okay, I can cut back from my job? How many properties do I need so I can buy a head of cattle? How many properties do I need to be able to go get a chicken pen with chickens in it, right? These are certain things that you need to work from. What is the end goal? What does it look like? How do you work backwards from there? If you need help working out that plan, I always say to callers and all that sort of stuff, I'm not going to say that anymore. I'm just going to direct you to one link, which is B.Invested.com.au. So www.binvested.com.au/discovery session. So binvested.com.au/discovery session. Type it in, book in a meeting, have a chat with them on a team, work out where it is that you're at today, where it is that you're going tomorrow, work out the strategy that goes in between. That's what we specialise in, is helping people be able to kick ass, take advantage of the system, take advantage of the matrix to get to where they want to be in a fun way. So on that note, guys, I'm going to go and read through some of your comments and questions, and we'll go from there. Pat, yep, exactly. Exciting time. Good time to be alive. Morgan said Klaus Schwab is great reset in full force. Exactly. Tom said here, Victor Dominello, he got the Bell's palsy from something. Exactly. Darling said, should we stock up on protein, power, lentils, and canned food if we don't have our own farm? That's something that's good, but just be mindful of what you're consuming as far as meat and fruit and vegetables, and how controlled is it, how modified is that food that you're having. Josh said they can print a lot on the CBDC. The World Economic Forum admit that they want a CBDC attached to a carbon credit score. Exactly what I've been saying for a very long time, and it is coming into reality as we can see from these articles. Matt said, glad to see you, Ron. Hope you feel better soon. Thank you. I shouldn't have been in that filthy place yesterday. It was one of my rental properties that had a rat issue, actually, and as soon as I went in there, bad sinus, bad everything. So Morgan said here, reduce super contribution to increase servicing. I'm not too sure. You need to speak to your broker upon that. If you need help, just reach out to my team at finance, and we'll see what we can do to look at your servicing. There's a long piece of string. Jane says, thanks for your time and effort this live, so much appreciated. Pleasure, Jane. Thanks for tuning in. He said here, 9 days till the new property is purchased. Great times, Bertie. Thanks for a lot. You've got some more things that you can do as well, mate. So we'll chat shortly on that front, Maui. And Sam said the AUD keeps crashing, 62 cents against the US dollar as of today. Can you see international buyers flooding into the market and buying up soon, which will form part of the next boom? Possibly. But ultimately, 62 cents of the Aussie dollar means that everything we are importing to the country is going to be much more expensive. So when we add on the cost of currency crashing, which our currency is crashing against the US, when we start adding in all the other elements there, it is going to add further to the bottom line of inflation. So interesting times. The only way for us to catch up is either we increase our interest rates even higher, which will kill our economy greater. So I said from the start, how do you want to treat it? How do you want to die? Do you want to die with a bullet to the head or a knife to the skull? That's the way that they have. These are the options that they have. It's not going to be pretty for our currency. The currency dying is not a bad thing if you have assets and you have debt and you have cash flow, because these things keep up with inflation. You don't want to be on a job with lots of expenses and no assets. That's the worst thing that you could have going through this period of time. Last one, Kylie said, thanks Nathan, how's the motels and hotels going? The motels are going great. I've got another 2 settling this month. I don't even know how many motels I've got. Lots of cool things happening there. Got some new staff, some senior management and a board to help with guiding my venture of the motels into the next level. On track for my goal to get 100 in 5 years. I'm 18 months in, up to about 30 plus motels. I've got over $30 million worth of motels under offer at the moment that I'm working on to secure. And sometime shortly, maybe in the next 3 months or so, I'll be heading off for a big lap of certain parts of Australia. I'll be documenting my journeys. I'll be inspecting these properties. I'll be giving you guys regular content about things that are happening within these different sort of markets and sharing heaps of cool stuff, because I'm a person who likes to live life on my terms. I think everybody should live life on their terms. You're not going to be living life on your terms if you're being forced to consume food which is bad for you, if you're being forced to do certain things that you don't want to participate in life. That's why I do what I do. Should take some more of my leaf of my own book, go and enjoy and discover the country that we live in. So that's what I'll be doing over the later part of this year, early next year, because I can, just for the fun of it. And yeah, exciting times and good things happening with the motel. So thanks for asking about that. I am going to go. I'm going to go on offline and go and relax. So we'll catch up soon. Want to thank everyone for tuning in tonight, and we'll catch up next week. Tomorrow I have a webinar. If you haven't subscribed and registered to it yet, you can reach out to my team. Check it out on the B.Invested website. There'll be links all around to go and find out how to get access. It is an invite-only webinar, so you will not see it published on any social media channels. There's lots of cool content for tomorrow. Make sure you're on there. 7 o'clock. I thought it was last Wednesday, but it's actually this Wednesday, so sorry for that for everyone that got confused. And if you do have a position where you want to grow and expand and get a life where you're living life on your terms, that's what we specialise in. Been doing it for 13, 14 years. I was one of the first people in this sort of space to be doing it. Probably the only one doing it on the rate of what I do and how I talk about things. If you want to connect with us, reach out to us, beinvested.com.au/discovery session, book it a call, have a chat with one of my team. It's free. See where a conversation goes, see if you can kick ass and, not just tell your boss where to go, but just live life on your terms with your own freedom and liberty to do what you want for you and your family. We'll catch up soon. Have a great day. Bye for now. Right, there we go. See you guys. Well, too many pop-ups on my screen.